Alrighty, guys. It is 3:30 this Friday, October 17th. Time to wrap it up for today. And I had to say, today has been one interesting day. Uh, difficult trading most of the day. I kind of tuned out after half the day of slop and chop and craziness. Towards the end here, actually, it looked like got actually kind of tradable, but it's as I said, I wasn't paying attention to the screen so much at that point. Late on a Friday, it's like, yeah, no, I'm not going to be aggressively engaging it at that point. So the moves happened. The most of the moves in the morning was pretty sloppy. And it turned out to be, I mean, with this crazy move we had in the overnight, that they really took out the lows and then some. It was all related to some credit risk issue with some local banks, some regional banks about there was some auto loans or something to that effect. So there's some risk of systemic credit risk in the system, which caused that big sell-off. And then as that got alleviated, complete reversal back up again, and we started off today pretty much where we left it off yesterday. But I bet you a lot of weak positions were shaken out in that overnight trade. That probably was pretty ugly. And then so we were slopping around here in the day session. We did not take out the 6650s. We probed below it. We did not take out the 6700. We probed above it for a bit. Then late in the session, 2 o'clock hour, we finally got a little bit of lift. So okay, fine, we'll take it. But they haven't really taken out that 6750 to 20. So we have still pretty much range bound, though we're ending up at the upper end of the range. And we can certainly retrace this whole thing pretty quick into the close as well if there's some profit taking going on. So no trades for me today. This slop we had, I mean, you saw this what happened in the morning, right? I mean, if you pay attention to these screens, I mean, this stuff here in the morning, there's just nothing you want to trade. Violent rotations back and forth. Yeah, you can get in on a profitable trade. I saw that I was watching this morning, and this first retest failure kind of set the stage. They ran it up 10 points above the area, and then real complete reversal, almost 50%. I said, okay, well, we're waiting until this whole thing comes down, and back and forth is went since then. Nothing much happened until we got into that London close. That we have our first little retracement. And I mean, you didn't know this was actually happening until we got late in the moment halfway through this, that something was actually retracing. But because this was slop was just part of the regular slop, right? So you got a little bit of a lift back up here, and then we pretty much ended up kind of where we left it. So I have not tried to trade this, and the last little move to the upside as well, reasonably decent. But I mean, it's kind of sloppy here and drifting back down to that midpoint. So day like this, I mean, you see this overnight to kind of set the stage, and then you see the slop in the morning, just kind of take a step back. So I have not traded anything today, so I'm watching it. Sometimes you get tempted, you see like, oh yeah, but you kind of just have to be really aware of what you're doing with that. Getting sucked into those momentum trades, you can go to break even and get shaken out. That would be your best option. If they keeps going, you'll be smiling and thinking you did something great. But most of the times you end up on a shitty trade because you're chasing it, you're late to the entry, and you basically end up getting kind of shaken out of the trades or even ended up in a loser. So we'll be starting off if they can hold above that 66.95 to 67. I would stay on a long side to get into the overnight. That basically holding that initial balance high. If they can't hold that to trade back in that range, we're starting off range band going into Monday's trading. All right. So bonds and the Nasdaq bond market, as you can tell, is not reacting. They're just kind of going sideways. This little movie right there, nothing happening on that. Bond market is absolutely sloppy, sideways action on that one. Watch the bond market. If that reacts based on credit risk, then you can start panicking. But if the stock market reacts, not so much. But if the bond market starts reacting, that means there's some credit issues going on, which you should be taken seriously. No trades on the bonds. Nasdaq, same story there. Massively volatile on that guy. I mean, you saw them taking this all. Look at this slot. This is just impossible to trade. And these bars, yeah, you look at the screens like, yeah, they look like normal. But yeah, if you consider the range of the chart, 24 600s to 24, almost 25,000. So you're looking at a 400-point range. Yeah, it's swinging wildly. And I just had to be very cautious trading it. So I get tempted. I get super tempted to engage it, but it's just a recipe for getting yourself run over. So even if you're trying to be less aggressive, like you're looking at this retest failure or maybe this retest failure, by the time you had to get out and get into that trade, around about 840, you've given up like 50 points in trade location. So hard to do. So you had to be a little bit more aggressive, and that just gets you, just exposes you more. So no trades for me today at all. But on the Nasdaq, same story there. If they can hold that 950 to 970 support area now, then we're going to start off on the long side. Otherwise, we'll start off range bound. And then finally, oil and gold. Let me go over to oil and gold. Flip you over there. Gold also crazy moves on gold. Gold was worse than the Nasdaq in terms of volatility. There were crazy stuff going on there. I mean, we talked about this area, the 42.85 this morning, and they were up to the 43.90s. They were $100 higher than that before we started this morning. So they retraced pretty hard as they took out that 42.85 per the analysis this morning. You wanted to stay on the short side, and they took it all the way down here to the 41.95s before they reversed it. Now, could you trade that? No, you cannot. I mean, you can try. You can try to get in on that, but you're not trading it. I mean, it's just you're looking at stuff like this, and you can tell it takes a while to build the chart. There you go. It's not even building the chart, it's just kind of running the chart. So it is pretty freaking volatile. And just drawing the chart is taking forever because it's so many ticks in this thing right now. And you can see, so this move to the downside here, that's the sell-off. I mean, these bars are massive. And the amount of volatility here is impossible to trade it. So even this little baby bar right there looks small, right? That bar is 89 to 98. So it's 100 bucks, 10 points, that little bar right there. So you can imagine how crazy this was. And again, there's nothing you want to trade unless you can trade with a big enough stop and handle it. So all it goes back to volatility versus your size of the stop and how much risk you're willing to take. So a day like this, when it's crazy, some people love this shit and they just go at it. And most of the times you end up losing money. Unless you get really on the right side of it and you don't get shaken out and it runs away in your direction. Well, there you go. But so that's gold. I would start off range bound on gold. Hard to say which side they're going to go on. Since they pulled back a bit, you may want to look for early weakness, but I'm not going to trade gold and just going to wait for it to calm down a bit. Oil, also on the way back. We rolled this to the December contract today. So we're trading December Z25. So far, they're holding below this area of resistance. Oops. Oh, come on. They're holding above this or below this area 57.30. And so we are staying on the short side on oil. No reason to trade it otherwise. So range bound oil and biases to the downside. Gold, range bound, but we probably start with a slight bias to the downside to see how it goes, but it could go either way, and it's so volatile, it's hard to make any predictions on it. So I'm just staying out of it for now. And I did crunch down my chart too. So I made my chart aggregation bigger, or I mean, in other words, I made those numbers bigger so that the chart crunched down more on gold, and it's still today so much volatility that it's just hard to read. So there you have it. So trade all from the short side, gold range bound, start with a slight bias to the downside if you want to trade it and see how it goes. But the ES and Nasdaq, they're getting there. I mean, towards the end here, it definitely looks like they're getting tradable, slowing down a bit, calming down. They're still pretty volatile, and I would just be very cautious, especially late on the Friday. It's no point of trying to engage it at this point. So that's where we are. A day like this, a good day to sit back and kind of do some other stuff and let the market calm down. And that's sometimes the right decision. You know, it's you don't have to trade every day. You want to wait for your setups. Try to be patient. You know, I struggle with that myself and being patient, but being patient is what usually pays off. Waiting for the setup, trying to figure out what the market is doing and engaging it when you have the advantage. All right, guys, we'll leave it there, and I'll see you back bright and early on Monday, and we'll go at it again. You guys have a great weekend. Later.